Let's talk about what happened in the stock market this week. It's been a very interesting period. I mean, we started a week with some pretty strong gains. And I remember on Sunday, okay, I was looking at some of the charts of some of the tech companies, and I'm going to leave pictures at the top here, okay? So Nvidia, all right, was trading at 104.77, and I was looking at, the chart, like as you can see, my price prediction, okay, was 122. Now I knew that there were so many factors that could play a major role in how this would turn out come Monday, Tuesday, Wednesday, and Thursday due to the earnings that were coming out and the economic data that was coming out as well. Tesla, my price prediction on that was about 208. Now I knew that it could always go the other way, just so you know. All right, because there were two main things that could have made this not even work out, and one was the economic data, which the CPI, PPI information that came out, all right, were really big catalyst here that pushed the market to higher levels. And I knew that if that didn't turn out as expected, or they didn't turn in the favor of the market, then this will be the opposite. But hey, I always try to put a bullish mindset first before we take the bearish mindset, okay? That's where these numbers came in. Then the next one here is Apple. So my Tesla prediction was about 208. The next one is Apple. My prediction was around 222. At the time when I was looking at the chart, it was 214.76. I believe aftermarket time was around 216.30, but the prior to close was 214. So my prediction on that was around 222, and then Microsoft, my prediction on that was around 414. And I remember looking at Palantir, my prediction on that was kind of, honestly, I couldn't really come up with a price prediction because I felt like I wasn't seeing the necessary signs of big volume and just the momentum that I needed to give me some information, especially using the chart. So that was really what happened. Now, as of today, all right, Nvidia was closed at 124.58. Apple closed at 226. Google, which I didn't do any chatting on, but at the time I remember looking at it, was like 159, I believe. It's 162 right now. I didn't look at Amazon as well, but Amazon was around 160 something as well. On Sunday, I remember looking at that. And now it's at 177. Tesla is 216. So my Tesla prediction was 208. So we definitely way exceeded those numbers, or definitely exceeded even more. I remember looking at Microsoft, and this is another one of Microsoft as well, where I said Microsoft is likely going to get a 422, and Microsoft actually did get to 422, I believe, during the pre-market times, okay, but during the market itself, during the open market period, it got to like 421, 75 or 81. Some of these companies have gotten to a level that I'm beginning to feel I am uncertain about where this is going. And why do I say that? The reason why I say that is because there was a lot of fear, all right? If you remember, the VIX got super high last week, 2 weeks ago, and now it's at super low right now. And that, it's like an inverse, a relationship with the market. When VIX is so high, then you have the market being pushed down. When VIX is so low, the market is pushed up. Now, when VIX gets to a low point like it is right now, I remember looking at it, the current level it is right now is at 1480, and the lowest it got to today was 1465, and I believe that's the lowest so far this week. Let's see, 5 days. Yeah, that's the lowest so far this week. Getting this low means that things may begin to turn around for the upside of VIX, which means the market may come down next week. These are all possibilities, right? So what are the things you can do to mitigate giving those gains back? One of the things you can always do, depending on the type of account you have, is to set what we call trailing stop loss. Okay, so that way as the market goes up, your stop loss, where the thing kicks you out, okay, sells the stocks for you in this case, moves up along with it. The second thing you can do is to think about using inverse ETFs to somewhat protect yourself. Think about hedging or just protecting yourself as like almost like an insurance, depending on the type of instrument you use. If you use things like inverse ETFs, usually you're buying shares of this ETF, all right? You're buying, it's almost like a stock, you're buying into it. And what happens is that if your portfolio falls, then the ETF that you just purchased, if it's an inverse one, all right, would usually go up. Now, it might not make all the money that you lost, but it might just make some of it back depending on the amount you bought. The next option, no pun intended, will be options, all right? If you're not familiar with options, then this is something that may require that you read more about it and understand how it works before you get into it. But it's usually what, some of these hedge fund managers and all the things, that's really what they would use. Now, there's so many levels to options, but usually what you want to do is that, for example, if you think that the market is going to fall in the next 1 month, you may buy an option, a long put, and that means that if the market falls, a put will make money, even though your portfolio is coming down. So depending on how much risk you're willing to add to your portfolio, an option may be something to add to it. Now, one of the things I always preach to everybody is, hey, long-term investing, keep a long-term perspective. And that's what I do for the majority of what I invest in as well. But there are times when sometimes you just want to maybe build a portfolio, you want to see the growth, and you're not too worried about taxes, depending on where these investments are held. Then you may want to trade, right? And of course, commissions may come with that as well, or fees may come with that as well. But the point here is, if you're keeping a long-term approach, then you may not have to worry about the pullbacks that we are likely going to get. Actually, it may be an opportunity for you to buy some more. So it may be a good idea for you to have some money on the side so that when things come down, you're actually able to go in and pick up some of your favorite good stocks. Just wanted to share this information with you. If you have found value in this, please don't forget to drop a like on the video. I'd love to see you in the next one.